Hey, good morning, everybody. It's Wednesday, May 27th, 2026. I, of course, am Hammer, founder of Hammer Solutions, home of great products to help my originator friends get more loans from Google and social media. Check those out there: Originator Success, Grab and Go Social, and Rate Sensei. So be sure to check those out and see how we can help you. Remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern Time, where I talk about what's going on in the headlines and in the markets, what's going on with rates and pricing for that day and in the future. If you would like to join me, say good morning if you're here this morning. If you want a reminder that I'm going live, get a text alert so you don't miss a moment of the show. You can sign up for that at hmmr.io/reminder or use the school QR code over here. You can also get a copy of our written email lock advice that was already sent out this morning. You can get that at ratelockadvice.com or use the QR code. Send out an email each and every weekday morning. Also, our $7 a month text alerts. If you want to protect your pipeline but don't want to spend a lot of money on a service that shows you fancy candlesticks, that's okay. $7 a month, and you get a morning alert, you get an afternoon wrap-up text, and you get alerts anytime that the market's moving. We want to either float or lock to protect pipeline. So good morning. If you're here this morning, like I said, don't forget to go ahead and say good morning. Smash that like button, tag an hello friend, share this post in a group. If you're watching the replay, do me a favor, give me hashtag replay in the comments. Welcome to the live, folks. Holly Johnson. Holly, how'd your son fare yesterday at the emergency room? Please let us know in the comments. I'm curious. Patrick Campbell, good morning, sir. Ron Siegel says today is National Grape Day. I know what Ron's favorite is. He likes grape jelly. Ron is a big grape jelly guy. He wants liquefied grape jelly. He calls it wine. Today's National Grape Day. What's your favorite kind of grape? I like not Concord. What are the does anyone remember the other names? There's one muscadine grape. That's the one that I like. Muscadine grape. What's your favorite grape? Let me know in the comments if you like grapes. What's your favorite grape? Muscadine grapes. I'm okay that grapes have seeds. We don't have to have GMO where we've taken the seeds out of them. But good morning, Leroy Romero, Paul George, Rob Wilson, Robert O'Connor, Allison Foy, Mike Tebow. Great to have all of you here. All right, let's go ahead and Ron likes Merlot. Do they do anything, Ron, for seriously? Do they do anything different with Merlot, or Merlot grapes just for wine? Sean said frozen grapes make great popsicles, green or red. That's actually true, especially in the summer. Frozen grapes are actually really good. You're right, dude. Good morning, Dean Young. 7 stitches, 10 days of antibiotics, no major damage. Good. Yeah, that's because there's tendons down there and ligaments that you don't want to mess around with. Hopefully he'll be able to play in his baseball tournament next weekend. Hopefully. So 7 stitches. There's a story to tell. I've had plenty of those. So very good. All right, I'm going to go ahead. Let's jump in and get started. Of course, we'll start with the technicals this morning. Let me go ahead, pull up the screen, show you what we got going on this morning over here. Taking a look this morning, you will see that we have mortgage-backed securities currently up a few basis points, not as strong as they were a little while ago. We were up, you can see it right here, this little peak. We were up just a little bit more, 8 or 10 basis points on the day. However, we're still up from where we were yesterday. Pricing yesterday came out right around here. Things dipped a little bit lower on the day, not enough for any reprices worse, but then we saw a nice little mini rally at the afternoon. And mortgage-backed securities did end the day higher than when pricing came out. Again, not enough to improve pricing, and then where that puts us now, that puts us high enough that we should see slightly better rate sheets this morning than what we saw yesterday. 10-year Treasury yield currently at 4.48. Again, look at this kind of pattern here. Let's zoom in on this and then we'll zoom back out. Hold on, here you go. So look at this pattern here. I know that arguably this blue line is the 25-day moving average. You could see that as of today. I'm actually going to change this to the 1 month for a minute so you could really see it clear. You could see this thin tail right here on today that the yield dropped to that 25-day moving average, but it's bounced off of it. That could be some technical resistance from further improvement. we'll keep an eye on it. I'm not too worried about the technicals right now, but it could give a little bit of a pause. And then once that's broken, we have that right here, this red line, the 50-day moving average. So we'll wait and see where this goes. But we are seeing a nice downward trend after we peaked the other day. What day was that? That was on Tuesday, March 19th. So worst level for the 10-year Treasury yield recently, dropping back down, falling. And we still have room to go, though, where we're back down where we were even just a few, 3 or 4 weeks ago, earlier in May. And April. So we do have room to see improvement there. Same thing with mortgage-backed securities. Let me make this a little bit smaller now. Hold on a minute. There you go. Okay. So look at this. I mean, we've had quite the bounce up. Normally, if it was just technicals we were looking at, we would be concerned that we would see a bit of a pullback after seeing this improvement right here. We don't have to worry about that because what's driving this? Arguably, again, today, you could even see this thin wick is hitting the 25-day moving average. I'm not too worried about the 25-day moving average providing technical resistance, though, for mortgage-backed securities. I expect to see them that they will creep higher as headlines that things are getting better, continue to stay the course. Everything else that's going on, again, stocks are extending their highs. AI is still driving stocks big time. And with oil prices calming down, that's a big part of it. Oil has really dropped. According to CNBC here, Tehran has committed to restore commercial traffic through Hormuz to pre-war levels within 1 month of an agreement with the U.S., according to a Reuters report citing Iranian state television. So we don't know how true this is. However, Iran will manage ship traffic through Hormuz in cooperation with Oman. And the U.S. military would withdraw and lift the naval blockade. And again, this has probably been they spelled it wrong, but it's still right. This has probably been the biggest thing that has helped us to get a deal with Iran. It's really starting to hurt their economy. So basically, the reason that I'm talking about this is as long as we see an environment where a deal is likely to get done, markets are pricing in this idea. That's why you're seeing bonds continue to improve. So let me show you rate sheets, and we'll kind of go from here real quick. So we go. All right. So looking at rate sheets, arguably, you could see that pricing continues to improve, 6.61, working its way back to where it was before we saw that jump here. So working back into the 6.5. So the kind of where I'm going with this is that in my world, what I see happening, we want to go ahead and continue and cautiously float everything. I think that we see rates continue to slowly improve until we get an actual deal announced. When an actual deal is announced and there's big headlines, you'll see bonds rally on that. And we can see rates start to move more significantly lower. I expect rates to be a quarter to even as much as a half a point better after we see signs that traffic is moving through the Strait of Hormuz. First when an announcement is made that there's a deal, then when we start to see signs that the deal is actually being met, right? So I do think we continue to see rates move lower. One thing I want to point out to you too is mortgage apps I think they're 5% higher. Hold on. Let me look. It's on CNBC. I think mortgage apps were 5% higher than last year, even though rates are higher. That's something to definitely be aware of. So let's see. Mortgage refinance demand drops 18%, which we would expect. That's what happens when rates jump. But that'll bounce back up when rates fall back down. And 5% higher than the same week a year ago. So there's more purchase apps, according to the Mortgage Bankers Association, this year than what we saw last year, even though rates are not at their lowest levels of what we'd seen, in February. So it's good to note there's definitely traffic and there's definitely loans out there. Refis, of course, are much harder to come by at the moment. As rates fall, that door will open up again. Make sure you're out there, drumming up business, shaking the trees, lining that stuff up. So Ron Siegel said a couple of guys on a business channel, a couple of hedge fund guys on a business channel yesterday discussing the 10-year below 4 in a couple weeks of a deal. I don't think that'll happen. Do you? Right now we're at 4.48. We were at a moment ago, so I don't think it goes below 4. Here's the thing. There's been a lot of talk about inflation and government borrowing costs, how much money the government is borrowing, that yields may not drop as low. So, we'll see. If that were to happen, that would be amazing. Rates would, of course, drop through the floor. I don't think that's going to happen. That's, go hedge fund guys. Maybe you got more than what I've got. So anyway, and yeah, the weekly ADP numbers, where are those? Weekly ADP numbers. A week ADP numbers this week. Yeah, for the weekly one that we're seeing, we saw a blip in bonds for about a split second, and then it kind of shook away. So nothing like sinking a mine-laying ship to bring Iran to the table. Hopefully again, I want you to be wrong in the fact that we're going to see things start. Expect significant volatility over the summer, as summer trading volume is always lower. Headline volatility be exaggerated with lower volume. Yeah, we'll get there when we get there, though. All right, my friends, I need to hit the road. I got 6.5 hours of saddle time to get home today. We got soaked yesterday, cut the day short. It was just a really, really brutal, raining, wet, dirty, rainy day. So hopefully I will get home sometime to this evening, and we got about 6.5 hours of saddle time. So we're going to wrap up and hit the road. Thank you again for joining me. I am in Kentucky today, by the way, in my high-level shirt. This is my loungeabout shirt as I get dressed for the road. We are in Kentucky and working our way down south. We'll probably go through the corner of Tennessee and then into North Carolina. So, all right, my friends, I'll see you later. Have a fantastic day. Bye-bye.